Everyone, this is Rob Roy, and welcome to TradeFinder Live. If this is your first time joining us at Elliott Options for TradeFinder, welcome. And if you've been here before, welcome to you as well. Welcome to everybody that's live streaming on YouTube. We're happy to have you. If this is by chance your first time watching TradeFinder or any of our videos, we have to show you this disclosure/disclaimer. It is important, so please take a screenshot of it, read it in detail at your leisure. Couple important things the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So again, the rest of it's just as important, but please read it in detail when you get a moment. Here's how TradeFinder works. If you're new, we'll talk about the markets. We've expanded this. Used to be just the U.S. market, but we get a lot of requests for markets around the world. So we'll throw some of those in there. We'll do a review of any trade alerts that we may have closed throughout the week for our alert subscribers, give you an idea of how that works. Then we'll do a review of our previous case study considerations as identified in previous trade finders. And then we'll look to see if we can find one for this evening. And with whatever time's left at the end, we'll open it up for a general Q&A, which usually amounts to you guys asking us about your favorite stock symbols, and we take a look at what our indicators may show regarding your favorite indicator. That's it. That's how TradeFinder works. So again, welcome. Let's go ahead and get into taking a look at the market itself. Hopefully everybody's seeing a chart of the market now. I'm starting to get this whole technology thing down with the live streams, etc. So here's the S&P, and as we've been talking about, and as I talked about in the weekend SPY update, hopefully everybody's had a chance to look at that. If not, please go to YouTube and take a look at it. We've been a bit overbought and been resisting doing anything too much to the upside with the vertical nature of this move, waiting for something along these lines. A little bit of a calming down of this more vertical move in the market. And if we take a look at the 10-day moving average, you can see with yesterday being kind of a sideways day, today pulling back a little bit, we've gone a ways to close that gap of where the market was in the 10-day moving average, representing that overbought condition that I was talking about. We don't like to chase things when they move vertically at Elliott Options, wait for more of a sustainable type of a pattern. When things go straight up, quite often they come straight back down. I'll let Tesla, if you've taken a look at that, and you can say, oh yeah, but that has to do with the fact that Elon Musk is talking about selling stock, etc. Maybe that has something to do with it. But in addition, the chart was just awfully vertical, and that's not sustainable, in my opinion. Don't like vertical moves. As far as where we are with the rest of the market, we still have these gaps here that are concerning. They'll get filled at some point in time, but that could be a ways down the road. Now, the important thing about this week is we've looked at the weekly chart that had that 460 target on it, and then we had a bar that broke above it. Highlighted this in that SPY update. So again, you can go see it there. Important to see whether we get a follow-through bar. When you break a major point of resistance, which that was a fib resistance point on the weekly chart, the same thing, whether you're looking at daily, weekly, hourly, 5-minute chart, whatever. When you're breaking a major point of support resistance, you need a follow through a confirmation day. So it's a bar to be specific. So on a weekly chart, you're looking for a weekly bar as confirmation. Will we get that? It's too early to tell. Early in the week, we've kind of settled down just a little bit, but long time to go between now and the close of business on Friday. So we'll see how that trades from here. And taking a look at the Russel as we continue on with the rest of the markets, not a whole lot else to say about that. I should bring up the volume though. Let's look at volume real quick before we go into that. And you can see that now we've got kind of a reverse thing here where on the down day, there wasn't much volume. So really there's been almost no volume if you take a look at it on that move to the upside as far as getting above this 200-day moving average. We hit it a couple times, average volume, but there hasn't been a ton of volume behind this move. Indications of perhaps that's retail buying coming in, that FOMO that people talk about, fear of missing out from the retailers wanting to say, oh man, the market's moving higher, I need to get in. Well, that's another warning sign of potentially the market's being ready for a correction. But hey, we're going to stay in tune with what happens at the end of this week. Do we get a follow through bar? We do have targets higher that we could move to the upside based on the weekly chart. And if we do, then we hit the follow through day, then we'll be back in with more fervor as far as long positions. Right now, we're choosing to stay more energy and things like that have been pretty solid throughout even this little bit of a move to the downside that we saw. Talking about the Russel, how long have we been commenting on the Russel with its breakout potential with 230 and 210? I also mentioned in that update that I'd said in the past that if we did break one of these levels, whether it was up above 230 or down below 210, there was probably a tradable move there, and we would look to take advantage of that, but wasn't going to chase this vertical move. So a little bit of a move back there as well. Still a little bit overbought on the Russell, a little bit more than the SPY. So perhaps it needs just a little bit more consolidation, back and filling, whatever. That's what normally happens when you break a major point. And man, when you've had a resistance level for an entire year, that's a major point of resistance. You see the separation here, a little concerning, I think, here as well. When the 10-day moving average starts to separate that far from the 50-day moving average, is another indication of overbought conditions. And yeah, I've been talking about storm clouds and things to be concerned of for a while. Doesn't mean that we haven't been putting on long positions, just saying that you need to keep a cautious tone and maybe not be quite as aggressive as you would normally be when you have overbought scenarios. But if we can get back down towards that 10-day moving average, or just even go sideways and allow the 10-day moving average to catch up, just to eradicate this overbought condition, the small caps look like a pretty good place to try to trade from here. And you can see that pretty strong breakout in that wave 3. And if we consolidate this a little bit, perhaps we can get a pretty good entry, because that DMI looks awfully good. It's about as good as it can look. So the small caps breaking out, that's got to be bullish for the markets. And so you have to say that, hey, we might be overbought right now. We might be saying that there's things to be concerned about. But as I mentioned in the SPY update, my personal opinion, that's all it is when the Federal Reserve came out and announced just a 10 billion tapering to start, and that they weren't going to finish the tapering program until midsummer next year. I think that was a little bit slower than what many people had been concerned about. And so that gave another shot in the arm to the market. And that's where we started moving higher from here, realizing that, okay, so they're going to taper, but not a whole lot. And it's going to be maybe a little more gradual than what was initially feared. And so that gives some ammunition for the market to continue to move higher. Looking at the Qs, they're moving up as well. We put the Elliott wave pattern on, also in a wave 3 move to the upside. Not quite as vertical, but not quite as vertical as that breakout of the IWM. And when we take a look at the 10-day moving average here, this is more like the SPY, a tiny bit, but not so much overbought. But when you have the small caps and the Qs breaking out, you have to pay attention to that. But again, let's just let things calm down from this vertical move and then move higher from here. I want to bring the VIX up. They're actually talking about this. Again, I keep going back to that SPY update. And so I hope you'll go and take a look at that on why is the VIX moving up while the market's moving up? And part of that is just reminding everybody that this is the volatility index. I know we've all become accustomed over time that it's more of a fear indicator. Because markets move down faster than they move up, normally the VIX moves up when the market moves to the downside and vice versa. But if you do have a volatile move to the upside, it's not unheard of for the VIX to move higher. So is this a warning signal here that the VIX is moving up while the market has been moving higher? Maybe, but it also could be argued that, well, the fact that the VIX is up as it comes back down, if what I would like to see happen, the market continues higher in more of that 45-degree range, not so much of the verticalness, then there's room for the market to move higher as the VIX comes back down towards that 15, 16 range. So I think that all plays into it perfectly as far as if you want an argument for the market to continue to move to the upside from here. We'll take a look at interest rates. Been on the record for quite a while saying that where rates go is going to determine a lot as far as where the equities go, and rates continue to come down. Well, now we're at a 50% correction on that wave 4, coming down, fill this little gap right here, somewhere between here and the 61.8% levels. What I highlighted in the update over the weekend is an area where interest rates could find some support, and you kind of want them to. I mean, this move to the downside, that's great. That's taking some pressure off the technology sector, but you don't want interest rates to go too far down, because then you're saying, all right, what does the bond market know that the equities market doesn't know? That would be an indication of economic weakness if we can catch in some sort of a bid. You don't want this. We don't want this kind of stuff. The market didn't like this at all. When it went vertically up like that, it was okay. When interest rates were creeping a bit to the upside, but not so vertically, this is where that little correction area happened in the market. And then it was able to move back with just a move to the upside here with this really nice zigzag pattern that occurred, and that completed. And so we've retraced that entire zigzag. We've come back down, fill this gap. We're at a wave 4 corrective level. So perhaps interest rates find some footing here and move back to the upside. And if they can move back to the upside without that volatile move, that vertical move, more along this kind of scenario, then the market's probably fine. From an interest rate standpoint, it wouldn't be as concerned about rates, is what I'm trying to say. And again, some ammunition for the market to continue to move to the upside. So you trade what the market gives you. I just think that when there's warning signs, it's not smart to ignore them, even if the market's moving higher. So you trade what the market gives you, but also have a little caution in your back pocket. I think that makes sense to do. So here's the XJO when we start looking at some of our markets around the world. Now look what's happening here. We had this little triangle right here that we highlighted a couple weeks ago in TradeFinder, and then we broke to the upside, came back down, didn't retrace the entire breakout, which is a little surprising. Normally that's what happens. And then you can see that we take a look at this, and is that a zigzag where we break out here? And you look and you say, yeah, it still barely qualifies as a zigzag. And so we could potentially have a move up here towards that 100% extension in the C wave of that zigzag pattern. So around 75.35 on the XJO. I think it's worth potentially looking at some sort of a larger triangle perhaps forming here. And the fact that we have likely completed a wave 5, forming a triangle. Classic Elliott wave stuff. Usually you go into corrective moves. So we had this corrective zigzag to the downside. We had a triangle. We possibly are in a zigzag back to the upside. I mean, this is all classic Elliott wave stuff at the end of a wave 5. So are we creating a new impulse move higher, or are we just consolidating and we're going to have a breakout and then that's going to create the new impulse? A couple of questions out there as far as where the XJO could go from here. If it does do a little bit more banking and filling here into this triangle, then look at the size of this triangle. So that's hinting at some sort of a significant move potentially coming on the XJO. But I think we need a few more days to see if we can stay maybe towards this point. So some sideways consolidation from here, just like we did back there at the end of September and early October, would be ideal for a breakout of the XJO. So I think that's really, really interesting. And then Bitcoin, we highlighted this triangle in the report as well. And there you go. So there's the breakout from Bitcoin, and trying to get some follow through there. So we haven't quite labeled that next bar yet, but once we do, then we'll have a potential continued move to the upside here from the Bitcoin, possibly up towards that 77 level in there. But there's the triangle, there's the breakout. We talk about triangles a lot because this is what happens. We actually sent out a couple of alerts for strangles for our subscribers today, because there's a few of these patterns that looked pretty good. With the move to the upside being so vertical, it did get rid of quite a few of our consolidation patterns. But this is one that looks like it wants to continue higher, as well as a couple of the other ones that we sent out. If we have time, I'll show those to you. Actually, one of them I think might want to take a look at for tonight, for our case study consideration for tonight, because it's really well set up. So perhaps I'll show you that. In addition, we've been asked to look at the DAX, and so here's the DAX, and taking a look at that, you can see that we're still at that 61.8% level. I think we were pretty close to that last week, so we're really close to it, or we're right at it again. And the issue here with the DAX, as we've talked about, is this 34 level. So you've got a 61% Fibonacci level, which is super strong, and then you've got resistance at 34. So you've got, you know, a lot of stuff for the DAX to try to break through. So I think that just a little caution here, whether you're trading it to the upside or the downside on the DAX. Let this play out. Will the 61.8% level hold? And do we come down because we do have a qualified 5-wave impulse pattern to the downside? Or do we break higher from here and disqualify this impulse pattern, which would then bring us back to those all-time highs in the DAX? So it's consolidating. It's doing exactly what it should do under a major resistance point. Also at a major fib level. This is what normally happens. No surprises here in the DAX. I just think this is one of those areas, again, where patience is key. And it's one of the things that I talk about in trading a lot. And I've been doing this for a very long time. And people always talk about, you know, what's the most important thing? Knowledge, education, obviously, are extremely important. Experience is really important. And one of the things that experience has taught me is patience. Let the patterns come to you. Don't trade what you think is going to happen. Don't jump the gun. Don't see a pattern is forming and then trade based on your expectation that that pattern is going to continue. Let the patterns trigger. Let them do what they're supposed to do, and then make the trade. So kind of hold the reins a little bit, reel things in, and let the market come to you, or let the patterns come to you, I think is really important. So taking a look at the Nifty, and it's stayed the same for quite some time now. And I've highlighted this, so I don't think I need to cover this too many more times, that if the Nifty stays above 49, you stay long. And here's why we talk about the follow through day. For those of you that are new, for those of you that may be just joining us on YouTube, and this is the first time you're seeing us, welcome to you. But talk about this all the time as a rule, that you have to have a second day of follow through, or confirmation day, and we didn't get it. So it looked like we were going to break 49, and that would have been a pretty significant break if it had confirmed with the second day. It didn't do it, so it's just a head fake. The market does that all the time to suck people in, and then look where we are. We're almost back at those wave 3 highs on the Nifty. So just one little peek at breaking that area of support at 49, then back to the upside. So the conversation continues the same way with the Nifty, as far as the fact that as long as it stays above 49, you stay long. And that's the bottom line. Taking a look at the Dow, people have been asking about the Dow more and more, and I've admitted that I don't look at the Dow as much because I'm more of an SPY guy, S&P 500. But taking a look at this, and we looked at the Dow along with the old Dow theory with the transports, which was brought up, I believe, in last week's TradeFinder, or could have been our insiders meeting last week, talking about the transports in the Dow. And that's obviously from somebody that's been around a while, because Dow theory talks about when the Dow breaks and the industrials break to a new high, then in a reasonable period or shortly thereafter, which there's no real definition to either one of those as far as the time frame, then you get a break higher in the transports. And so let's take a look at the IYT and see if we've broken above that level, and we haven't. So we don't have the confirmation from Dow theory yet. We're right there. We're awfully close, but it hasn't broken it yet, and it has to actually break that level. And I talked about how close this was, a high of 282.40 back on the 10th of May, and then we hit 281.45, so with 1 point on the IYT. But this resistance at this point, that's a fairly vertical move as well. So perhaps we get to the point where we get some sort of a stronger break, and consolidation could allow that to occur. I do want to highlight this, talk about this all the time. Elliott really made a point to say, don't forget the small triangles. Yeah, we look at the big ones for our strangles, for our volatility strategy for our alert subscribers, but the little ones matter too. And it showed you the one on the XJL. There's another one there. It doesn't matter whether it's a big triangle or a small triangle, they break out. And the thing that with our strangles, we put the math in our favor. So on a breakout, you get the fastest movement in the gamma and delta as mathematically possible, but you still need enough of a move to make it worth putting on both sides where you're buying a call and buying a put. Even with the math in our favor, you still need enough of a move. And so that's why we don't necessarily trade strangles on the smaller triangles, but you still want to identify them and realize that, hey, a potential breakout move is on the horizon. So that's about as far as it should have broken out based on the width of the triangle. So it wasn't enough of a mouth here in order to break through resistance right up there. That's the level. So yeah, a lot of interesting things going on. So we've covered a lot as far as the markets here. And I think we're at a very interesting time. We are, for those that are fans of seasonality, we are moving into a seasonally bullish time of the market. And we'll see if that plays out this year. It doesn't work every year. Nothing works 100% of the time. A couple of years ago, we had the market low on December 24th on Christmas Eve. That's not how things usually happen. So you can't put all your eggs in one basket, even when you've got some of these old adages that stand the test of time because they happen the most of the time, but not all the time. So there we go. Well, we've got breakout in the Qs, breakout in the IWM. Both of those are looking good. Calming down on the SPY a little bit. Really, the only thing that hasn't broken is the Dow theory comment of the transports breaking to a new high to follow along with the Dow. But with a little bit of consolidation, who knows, that could happen. Here's again another one of those concerns. You can see how separated we were from the 10-day moving average. So you break out from a triangle, you get too far away from the 10-day moving average, so you're getting overbought. But look at this separation again from the 50-day moving average. So I talk all the time. I'm going to leave the markets with this comment about how no security in any time frame gets very far away from the 10-day moving average. But it holds true as far as the 10-day and the 50-day. They don't separate a whole lot for very long either. Obviously, they do this, but when that occurs, usually they come back together. Now, that's going to take either a sideways consolidation for a bit or a pullback in order to bring that down. And with a 10-day moving average, so you're talking about a couple of weeks before you get some sort of a noticeable change. So do we pause here a bit? We'll just have to wait and see how things play out. I'm still going to keep a close eye on that TNX and see what happens with that corrective wave 4 right at a 50% level. If it bounces too strongly from there, the market won't like it. If it bounces and breaks and disqualifies that 5-wave pattern, market's not going to like that either. The market wants the bonds to just stop, interest rates to just stay right here, just move back and forth between here and a 1.5, whatever, and on the 10-year and stay in there. That's the sweet spot. That would be really good for a continued move higher in the technicals, as well as small caps would do well there. Small caps can do better on higher interest rates than tech does. But anyway, so that covers that. And I thought before we went in to take a look at the past case studies, I'd show you a case study alert that we had closed out. This is one that we had on our list. We had actually identified this one during TradeFinder, and we did send this out as an alert to our subscribers. If you're new, if this is the first time you're seeing us, this is what our trade page looks like at Elliott Wave Options. Website is EWOTrader.com. And each alert that goes out has a page just like this under this tab, and it lists all of them. So you get the symbol, each alert has a trade ID, you get the strategy, which of our portfolios it's in, what's the actual alert as far as the option trade that's being sent out, the number of days in it, and then you get a mark-to-market graph, which shows you where the position is each and every day. And so I'll just go ahead and go through this as far as the BOTZ example. Entry alert was sent out on the 15th, and so you get the detailed information there, and a chart is also included in there that shows you the pattern. As things are, well, we're not.
Sorry, your screen's frozen at the moment. Sorry to interrupt there.
I needed to hit that button again, so I was patting myself on the back and then forgot to do it this time. All right, so let's go back here. So here's what the page looks like at EWOtrader.com. And the things that I was talking about, all the detail that's there. Here's that mark-to-market graph I was highlighting. I want you to focus on that for a minute because it's going to play into what I was talking about as far as patience. So here was the entry alert that was sent out. And you can see we were consolidating this wave 3. It looked like a good time to get in. Price target there with the wave 5's tap box up there at 41.5 or so. So it looked like we could go there. Issue with a wave 3 without a really good zigzag in it is at what point in time are we going to create the wave 4 correction? And I'm sure you're aware, if you've been following along with this one, that's what happened with bots. But all it did was go down and create the wave 4. So it came down here and bounced off the wave 4 and then made a new high. So for a period of time, this was a losing trade as the wave 4 was coming down. We've talked about it in our past trade finders. And there you can see it was as much as a 77% loser at one point. But you stay with the patience. It didn't disqualify the Elliott wave pattern. The 5-wave impulse pattern was still there. Sure, we'd like everything to move really quickly. That would be great if they all did, but they don't. Elliott wave highlights the fact that the market is a series of impulses and corrections. That's what the market does, and that's what Elliott wave identifies, is why it's such a good indicator. So here we needed to have that wave 4 correction. It did, and now we've moved back up in the wave 5, and we're able to recover that loss and close this position with just under a 6% gain when it was at a 77% loss. So if we just said, oh, you know, I'm done with that, it's past a 50% loss or whatever, well, sometimes you let the patterns develop, let them come to you, realizing that there was nothing that had disqualified the pattern. It just had gone through a corrective phase before continuing to move back to the upside. So rather than closing out at a 50% loss, taking the loss and moving on, or something greater than that, wait, let the pattern develop. It did exactly what it was supposed to do. And there we go with the trade that was once a loser that turned into be a small gain, but still it's a whole lot better than a 50+ % loss. So I think that's the theme, is that I'm trying to highlight in the markets. I think it's a good time to be patient right now and on individual trades. Have patience. If you trust your system, if you've got a technical system that you trust, then don't be too quick to get out either. Don't run for the hills real necessarily really fast unless the pattern changes, and they do change. Elliott wave patterns will relabel. The pattern can become disqualified. Things change, and when that occurs, that's a different story. But if you're just going through a minor corrective phase and the pattern is still intact, that's one where you might want to say, let me give this a little bit more time and see if the pattern doesn't do exactly what it's supposed to do over the long run. So just a qualification difference there between being patient when a position showing a loss or closing a position because the pattern that you saw when you entered the position is no longer valid. Two completely different scenarios there on whether to take a loss and get out, or maybe put up with a loss for a while and stay with it. So completely different scenarios there. All right, so let's go back and take a look, and I'll make sure that I get you back to the right screen here. Hopefully we are back seeing the chart again. And so we already did that one. We've closed that one out, as you saw. So that one goes off our list. Take a look at this one, a line that was back on 824. And you're going to see something pretty similar here. And there you go. So there was the wave 4 correction. What's happening? Going back to wave 5. So it's identical to what happened with bots. Did the exact same thing. And so we've got a little vertical here. You can see a little too far away from the 10-day moving average. So we're watching that closely. Perhaps if we came back down, I talk about this a lot too, that a great scenario here would be if we came back down to 680, let that 10-day moving average catch up. So it calms this vertical move here. That would be a good time to consider entering for the continuation of the wave 5 up to the target at 800. But the market doesn't always give you the ideal scenario. So we can talk about that all we want. If it doesn't do it, it doesn't do it. But that would be a great entry, I think, coming down to the 680 level, letting the 10-day moving average catch up. So we're not overbought anymore. The DMI still looks pretty good. Good separation still between the positive directional indicator. The ADX hasn't hit 40 yet, so it doesn't look like this move is over with yet. But you don't want to chase a vertical move. That doesn't make any sense either. And so then next we have Camping World, and this one just wants to confound me. I'm sure that that's the modus operandi here. I really like Marcus Lemonis, who's the CEO of Camping World. He's on that show, The Profit, on CNBC. If you've ever watched it, this is his company. And then you can see that we kind of went sideways. We formed this larger triangle. It just wasn't ready yet. And then it gave us a bit of a move to the downside, which to me made more sense. And then look what's happened from here. So they did report good earnings. And I can sit here and talk about how interest rates were going up. Well, they're back down now. So the scenario that I was talking about, as far as I don't see why this isn't moving to the downside, with oil going up, fuel costs going up, putting them in those big old motor homes and campers, and then interest rates going up to where it's going to cost more to finance them. Well, oil is stabilized a little bit, still bullish though, but interest rates have backed off, and so that was enough. And they had good earnings. You can't debate that. So perhaps this one ends up being a full-on break to the upside. Got pretty vertical here, came back, retraced it, and look, I'd like to show you this here, where we break here, even though it was an initial false breakout to the downside. Here we retraced it, and we're moving back to the upside. That's one of the methods of the breakouts of triangles. Triangles will give you a head fake. Sometimes they'll go vertically up and just take off. Those are fun because those usually happen very quick. And other times you get a breakout, comes back and retraces it, and then it moves on a little more of a calmer trajectory rather than the vertical nature, which appears to be what's going on here. So perhaps this one ends up being one that gets close to the long side here. After all, we had looked at this one info as a bearish trade, and then we sent this one out as alerts to our subscribers, and then we adjusted it into a long position. And now you can see that we have a triangle forming here as well. So we've got a descending triangle. That doesn't mean that it's going to break to the downside. Maybe it does, but people that tell you descending triangles break lower and ascending triangles break higher, the data doesn't back that up. The data backs up that triangles break out, but you can't pick a direction on them. The descending triangle can break to the upside just as easily as a downside. Bitcoin did, is a perfect example. We were highlighting that one several weeks back before it had its big breakout move. So we'll see if this level of support at 125 holds and we get an upside breakout. We'll probably know by the time we get together next week. And then Texas Roadhouse is another triangle with a triangle pattern here, looking for a breakout in either direction. We don't care which way it goes. This one looks pretty similar to what just happened here with Camping World. Almost the identical scenario where it kind of broke, but it really didn't significantly break down, just kind of broke and went sideways, pretty much testing the lows. And now we've got this gap up, which I don't like that. I wish that gap wasn't there, but perhaps Texas Roadhouse ends up being one that we close out to the long side. Remember, with the strangles, we don't care whether it breaks to the upside or the downside. And in Elliott Wave options, we utilize these strangles in our volatility portfolio to help create a bit of protection against the impulse portfolio, which is the directional one. Because if you do get some sort of a significant move down, and this happened back in March of last year, we had a little blip down in our equity curve, but nothing like a lot of people experienced because we had all these strangles on. And when the market tanked like that, all those long puts and the strangles all made money. And so the fact that the directional upside stuff didn't do well when the market reversed, that portfolio helped to keep us in there for the overall having both of the portfolios. And that's why we do things the way that we do them. Taking a look at XLF. So this one was on the 26th. And if you remember, when we were searching through this, we had an awful lot of financial stocks. This is when interest rates were going to the upside. So it looked like, hey, instead of trying to find an individual financial stock, why don't we trade the sector? A little bit vertical there. And that's what happens. Get a little bit vertical, and so it consolidates. Now, at least it wasn't a significant move back down, which could have occurred. We're just going sideways here, forming a point of support right there. Look at the doji on the charts. Now, isn't that interesting to see the doji on the XLF when we have the TNX at a pretty solid potential support on that wave 4 correction? Is that going to be it? Are interest rates going to start to move back up? Are the financials going to follow them? Likely. if interest rates start going back up, you're probably going to get another run out of financials, because the financials do well when interest rates go up, because it widens that spread. You've heard me talk about it numerous times for banks, where they they borrow on the short end, lend on the long end, and so the spread in between is how they make their money. So they like it when interest rates go up, because it widens the spread and allows them to make more money. That's why financials go up when interest rates go up, as long as it's not something that just spooks the entire market. Then last week, the ones we looked at were FND. So that's where we were last week. Again, a bit vertical on that move, and had a big down day on Friday, but it's recovering that. But we need to keep an eye on this one. This one may be one that we consider some sort of a closure. But so far, the wave 5 pattern is still intact. It held this area 130 where it needed to. This zigzag pattern you can see right here. Went up to this 38.2% B wave correction, supposed to go to 61.8. It did. Looking at the DMI looked good for a continued move higher, which is why we went ahead and took a look at this one. We look at our confirming indicators when we have a completion of a zigzag, or a zigzag that's hit its target, because they can extend. The C wave can extend, and perhaps it just needed to come back and test that area, and then it moves back to the upside from here. We'll see. But if it breaks that level, then that changes things. So we'll keep a close eye on that one. We haven't closed many. I mean, our record on the TradeFinder alerts has been pretty phenomenal. If you go back over the months and months that we've been doing TradeFinder, and the case study considerations that we found have been very profitable. And then we also look at FAST. So we just went ahead and took a look at both of these last week, and that one took off to the upside. So that's more what you want to see. So see, we were at 57, and this one, boom, to the upside, hit almost 60 there on Friday. And so 3-point move, not quite. Kind of, we usually talk about a potential 10% move on these directional ones. It's not there yet. The ADX still shows that there could be more. A little bit of a tick down on that positive directional indicator with sideways movement yesterday and today, even though today was an upward day. But this looks good here as far as the sellers aren't really asserting themselves at all. This is more of just a pause in buying. So this one looks good for it to continue to move to the upside. So that's all the ones that we looked at last week. So let's go ahead and see if we can find a case study consideration for this week, and be interested to see if we want to look for something to the long side, or if we want to look for another consolidation pattern with the market kind of going sideways a bit here. Yep. So I needed to reset my screen, and software wanted me to do that as well. So we'll just start that over again, and then I'll bring you back over to the screen, and we'll see what we can find. So just before we look at the charts, while I'm doing this, why don't you throw a couple comments in there and see what you want as far as, do we want to do a directional trade? Do we want to do a consolidation trade? You guys vote a little bit here. And if you're not familiar with this software here, this software is a program called, I'm going to look at those, Profit Source. And to me, it's the best Elliott wave software out there that exists. And I've traded all the ones that I'm aware of that exist, and it's programmed directly to Ralph Nelson Elliott's algorithm. So if you're new with us and you haven't heard me talk about this before, or if you're streaming with us on YouTube and you're new, it's called Profit Source, programmed exactly to Elliott wave's algorithm. And then because I utilize this program, a lot of our Elliott wave option subscribers were using it as well. So the folks that created this program, you can find out more about it at hubb.com. Put these filters in here for us. So if you're an Elliott wave options alert subscriber and you have the program, then you can have these, which these are pre-computed searches. So you just click on it and automatically the search results are there. These ones that say EWO are those are mine. Those are ones that I've created. But you can create your own within Profit Source. You have your own favorite indicators. You can run all kinds of diagnostics. You can, put practice of almost like a paper trading account where you say, I'm going to allocate X number of dollars into trades and go through and see how your system would have done over a year, whatever, 2 years. But then you run those searches when they're pre-computed, the results are already done for you. So it saves a little bit of time. So here's two that are in the impulse side. Let's see what you guys are. Nobody's really. So you just want to look at symbols, huh? Nobody cares which one we pick. So lots of symbols coming out, but nobody's saying whether they want to go long or consolidation. So, all right, I'll pick it. Here's synopsis, and we'll take a look at this chart. So so that's a pretty good looking DMI for round two at the Elliott wave on. That looks awfully good. We're breaking above that previous wave 3. It tested it for a day or two. That's really good price action there. That's what you want to see. This one's going to be hard to beat right out of the bat. The first one with a wave 5 target right around 370 or that's pretty good. That may be the winner right out, just first one out of the gate. Wow, that looks pretty good. So let's go ahead and see what CNC looks like. And could be similar. DMI doesn't look bad. This one's in a corrective phase with that previous wave 5. So let's look here. Well, the DMI is still not bad. This still looks pretty good. This one hasn't broken above. This one's finding resistance here at that previous wave 3 and wave 5 highs. So we went back on wave 5 at 43%. You're supposed to retrace the entire wave 4 and did. A little bit of a triangle there. So it broke back down again. Another little triangle here. Broke out, tested it, and then took off. But I kind of want to see this one break above where we are right now. The DMI is suggesting that it could. There's some strength there to that move. But I think this one goes on a watch list for me. I talked about this before, that I'm kind of old school with writing down stocks on watch lists rather than inputting them into a Excel spreadsheet or whatever that more computer savvy people this day and age probably do. But for me, I got a little bit overbought after this day here. That was the 3rd of November. You can see, boom, it ran right to that resistance area. And then we've gone sideways and consolidated from there. So we want to see if it can break above that level before we would enter. That's kind of the way I would look at this one and see how it plays out from there. So I'm just going to go ahead and make a note here for tonight that we're going to look at synopsis is going to be our consideration. Perhaps we'll pull up a couple consolidation charts and see if there's anything looking good there. But that's going to be our winner for this week. And then we'll start to get to look at some charts, and we might actually finish on time this evening. So there's 47 there. Now, one of the cool things that you can do, and if you're like, I don't want to look at 47 charts, even though it's whittled down the thousands of optionable issues down to 47, but you can come over here and click, all right, let's look at those that are in a bullish wave 3, but are going through a consolidation phase. And so you can see there's 3 of them. Archer Daniels Midlands, one done in the past. So you can see here's what it comes up with. So there's a wave 3 and there's a consolidation pattern. So that's exactly what it's supposed to show. And that's what you can see right there. The ADX is low, and with this area here and what's going on with oil, etc., you could certainly see this one breaking to the upside. Now, perhaps it comes down and breaks down and creates this wave 4. Now, this is where Elliott would say, all right, when you're in a wave 3 impulse like this and you go through a corrective triangle, you're likely to break to the upside in the direction of the wave 3. And what we try to do with our subscribers is kind of take some of Elliott's stuff and meld in, if you will, a trader's approach to Elliott wave. And from a trader standpoint, I've seen too many triangles that maybe you would have thought were going to break in the direction of the impulse, but in the end, they actually break the opposite direction. So kind of vary a little bit there and say, what does it hurt if you can put on a strangle, and especially the kind that we put on, and protect both sides? Why do we need to pick a direction? Not necessary to do that and take that additional risk of picking the direction, I don't think, when you're in a triangle, even though it isn't a wave 3, but it's telling you it's consolidating. And I'm saying that experience has shown me this could break down and create that wave 4 as easily as break up and go hit that wave 5 target. So for me, this looks like a really good strangle. So maybe we'll do that. We'll just make a little note here is kind of a side note or a bonus one that ADM as a strangle might warrant some watching as well. Let's see if it's enough of a move though before I say that. So 62 to 6, it's not quite enough of a move. So this is just going to be a watch list. And what I'm doing here is I'm looking at the mouth of the triangle, because with the mouth of the triangle gives you the approximation of how far the stock's going to break. So if it's a from 62 to 67, that's only a 5-point mouth of the wedge. You want to see about a 10% move out of the stock or forecasted move. So if we're dealing with a $64 stock, you're looking for a better than 6% move potentially on the breakout. But with the fact that the width of this, and it's a really strong setup here as far as where the bottom of that triangle is, a lot of resistance, it's only 5 points. So it's not really enough of a potential move for us to go ahead and put in our strangles and take that risk. So for us, we would look at this and say, hey, let's keep an eye on it, see what happens. Perhaps it becomes a directional trade once it breaks out. So if it breaks to the upside and gives us confirmation, we can still trade it to the upside, but it's not necessarily a great candidate for a strangle because the forecast move is just not high enough. So you get a lot of the rules that we share with our subscribers here, and good time to be putting on strangles, I think, moving into the end of the year with this vertical breakout. Perhaps we do consolidate, set up some really good strangles moving in and see what happens at the beginning of the year. So that could be a good setup moving in towards the end of the year. So come along and join us if you've ever thought about subscribing and you're a little bit unsure of where the market may go from here as well. This is a dividend ETF. It's not enough of a movement there either. So one more, we'll look at Ralph Lauren. And you could say, well, yeah, this should be pretty good going into the end of the year, right? It's a retailer. This their time of year, getting with Black Friday on the horizon, and then we've got a doji right there underneath that level. So this is a really good ascending triangle. So we've seen them all. So you've seen a descending triangle and a symmetrical triangle on ADM, and here's an ascending triangle. So there's the 3 ones that we look at. 3 different setups. I know there's breakout patterns that are flags and pennants, et cetera, that people look at. And yeah, those are breakout patterns. I acknowledge that. But at Elliott Wave Options, we like to stick to the Elliott Wave corrective triangles. And so it's ascending, symmetrical, and descending triangles. That's what we look at. So on this one, it looks like it's pretty decent size on the triangle. So the bottom is 110, 130, so it's 20 points. Yeah, so there you go. Now that's $130 stock, so you'd want a 13-point move, and you've got 20 points here between all of this support at the bottom of the ascending triangle, and then you've got resistance at 130. So 20 points here in the mouth of the triangle, and better than a 10% forecast move. This one could break higher from here and go test that recent 5, which would happen to be right at the top of the tap box. So there you go, as far as another one of the scenarios that makes sense on the breakout. We'll see how that one plays out. So we'll keep an eye on that one as well. But I'm going to stay with SNPS, and we'll put these 2 on just a watch list, and perhaps next week I'll remember to show you those. And just out of curiosity, we'll see what happens with those from a watch list standpoint. All right, so let's go through and see what you want to look at. Symbols, we've got a few more minutes here. So Gunther wants to look at AMAT. I haven't looked at that one in a while. That was on the list there. Whoa, there you go. I can see why you want to. You're pretty good at finding these big breakouts. Gunther, I've noticed that. You and Kevin come up with these, but that's a pretty vertical move there. So here's the ideal scenario again, right? Do we come back down, kind of test that breakout from the previous wave 5, let that 10-day moving average catch up a little bit? Obviously, the chips have been struggling for a while because it just hasn't been enough of them, but the demand has been there. If they can start getting production up to meet the demand, yeah, you can see where we can start to have some significant move higher there. But moving it with this continuation here up to 165 or so, 150, I would just want to see this consolidation or correction here a little bit, and then see if that continues up from there. I think that makes a lot of sense. Just a tiny bit overbought right now. Let's look at our indicators. Wow, yeah, if you found another good one. So really good looking DMI. Doesn't look like he could do much better than that. And let's see if the CCI is flashing anything. Yeah, a little bit on the upper end of the threshold there, but it can stay there. But it's just enough of a warning for the short term, which, just giving you another signal that just a tiny bit overbought short term. If we can move back down towards zero, that would be great. Give it some room to turn and move back to the upside, and the money flow is as good as it can get. So if you're not as familiar with chicken money flow, that's one where you're looking for convergence or divergence. People get really caught up in whether or not you're above or below the zero line, and that matters. But what you're looking for is confirmation or divergence out of this pattern here with the CMF, the histogram, and you've got good confirmation here. So we had that low and it's gone straight to the upside there, and it is confirmed that entire move up. So the money flow is telling you, yeah, everything looks good. And this could be one where we come back and look at this again next week and it goes right to 165. You're like, Rob, you missed that one. And that happens. Stocks can go vertically for a period of time, but not for a long period of time. So for me, I would have a hard time chasing it right now. And I may miss this one. It may go straight to 165 before it goes through its consolidation and comes back to the 10-day moving average. But my discipline just will not let me chase that. I just can't do it. And so if I miss it, I miss it. But there's just too many of them that do come back to the 10-day moving average sooner rather than later. And you find a little bit better entry. And what do you think's happened to the IV and the call options right now with that vertical move? Call options are expensive right now. So let the stock calm down a little bit. Take some of that IV back out of the call options and you get a better potential move there. But, I'm trying to be fair as far as I can't look at it, but and for another day or two or wanting the consolidation, but, admitting that, hey, could totally miss it based on that. MUR, take a look at this one. Murphy Oil is in the whole Archer Daniels Midland space here, and take this off. And so the DMI is looking for round 2 here. And what I mean by that, if you're newer or haven't watched us before, is so you had this really great DMI on the wave 3 to the upside. So then we created the wave 4. And now we're moving back to the upside. Well, the ADX is slow. That's why we look at the CCI. It's a lagging indicator. The two directional indicators are far more responsive on a day-to-day basis. But the ADX, the black line measuring strength, sometimes that takes a bit of time to turn, but it's trying to turn back, and you're getting separation again between the two directional indicators. This I really like. So when you created the wave 4, all those directional indicators did was come and kiss together and go back apart. They didn't really make a significant cross to indicate that, hey, be careful, the bears have taken control. You had a pause in buying, little bit of assertion from the bears. It's almost like they kind of tipped their toes in the water and said, man, not yet. This still has some buying pressure behind it. And so we ended up, moving back higher here. I think that makes some sense. I would want to see that ADX turn, so I might give it another day or two. But again, don't miss the whole move. We could be up there at 34.5, 35 before that ADX turns. But a really good looking pattern, tiny bit. So again, I'm hoping the CCI is backing me here on some of these that just need a day or two to rest. And then we have better entries, or I missed both of them. So AEYE, is that the symbol, Joe, or was that a mistyping for audio eye? Oh, answer my own question. That is the symbol. Thank you. So here, this is this one of the meme stocks? It's down here sitting around 10, lots of consult, big, huge descending triangle there. So let me just draw that as we have our support right there at 10. And one thing that here, give you a little idea of what I would look at here. So if you're thinking of going long here, the stock's been above 10 for a long period of time. And I've highlighted this in the past. $10 is very important from an institutional standpoint, because when a stock gets above 10, all investment objectives, growth and income, et cetera, can buy the stock. If it breaks below 10, between 5 and 10, it has to be an investment objective of aggressive growth. So if there is good institutional ownership in this, then it's likely that those institutions are not going to want the stock to break below 10, because right now it's just an unrealized loss if they were in this earlier. But if it breaks below 10 and then they have to sell it, then it becomes a realized loss and they have to report it. So what tends to happen often is when a stock comes down to one of these thresholds like this, 5 or 10, is they'll come in and try to buy it, especially when you've had a stock that's had a significant move down. So I'd imagine the short interest is pretty high here. Maybe that's where you came up with this as well. And so if the institutions can buy a little bit of it and force a short covering rally, it gets some distance between 10 and where they are, gives them a chance to maybe slowly get out if they want to, or perhaps it takes off and runs and catches more attention. But they like to do that in order to avoid taking that realized loss. So we'll see if this one could do that. But if you were looking for something really speculative here that had a potential to create, a short covering rally, not talking about anything like GameStop or AMC or anything along those lines, but it could move up 13, 14 up in that area. With a little bit of a move similar to this is probably exactly what happened right here. Okay. I'm sorry about the pause. It said the recording stopped and then it's back on. So hopefully everybody's okay. We've seen the chart okay.
Hi, Rob. Yeah, we can see the chart. Not sure what just happened there.
Yeah, I guess we just had a technical glitch there. So anyway, this probably, you could see a rally very similar to this, whereas probably what happened then, they came in and supported, they got a little short covering, we moved up. That could very well happen again. We'll have to wait and see if it does or not. But if you want to be, I just want to highlight this, that's a very speculative trade. It should be with very, very high risk capital that you'll be willing to put in, but it's a possibility. The other side of the coin is if it breaks below 10 and it follows through, then the institutions will have to sell and it could run down really quickly. So that's the opposite end of the coin there. Speaking of AMC, Charlie's asking about AMC. Is it breaking out? I can't touch these things. I can't. So I'm happy to look at the chart. There's so much volatility still in the options of these things. And you can see that massive, massive triangle here. So look, here we go. This was, and I did look at this because this is how I would like to trade this stock. And you could not, they had the options priced to where you could not make any money on that breakout. The way they skew the deltas, have you seen that? Where when you go in the money, the delta actually starts to come back down. I've got some institutional market maker friends that I want to ask about how they can get away with that. But so clearly this was my favorite. This is my favorite breakout pattern that exists, a vertical move with a symmetrical triangle. That's going to break out. It's going to do what this did every time you find this. That's as close to, the rule of no security gets far from a 10-day moving average. That happens all the time. This happens all the time. I'm not going to say 100% of the time, but man, it happens way up there. It's as close as something that you can count on exists in the market. And so it broke out, but you couldn't make any money off of it. Now, perhaps it's gone sideways long enough that I could look at the options again and see how the pricing is. If they're still ridiculously priced, likely a big move coming up in AMC, and gave you a little bit of a false breakout to the upside yesterday, back down again today, staying in this triangle. Is it breaking out? Not yet. Does it look like it's going to break out? Absolutely looks like it's going to break out. And it looks like it's going to be a pretty big run when it does. no idea which way it's going to go. They could look at, I'll take a look at that tomorrow in the options and see. I'm just hesitant because it was impossible to make money on that stock from an option standpoint in the past. I don't know if it's gotten any better or not, but I'm happy to take a look at it. So USO, we can look at that. We're going to look at that Thursday night as well for our alert subscribers. Nice move back to the upside today. USO looks great. That's, it's just a little bit of a blip down, and we don't have massive separation, not a vertical move. See, this is why I like these 45-degree angle moves, because you get small corrections. You don't get straight up, straight down like this. Look at that. There's Tesla. Talked about what a good short that would be. Should have done a leap short, just like we talked about doing, because that's what's going to happen when stocks go vertically. And I know you can say, oh, you just got lucky because Elon was tweeting about selling. He was going to sell shares anyway because he has to for tax reasons and other things. But this whole tweet that he sent out and everything else, he's just playing to everybody. He loves to do that. He gets a kick out of it. But anyway, so that's why I don't like things going vertically. There's a perfect example of it. But USO, I think if we bring that back up, I think that chart looks good. And I think that there's more to go from oil. I don't think we run this far and then it just fizzles out. You got another good cross here with the directional indicators. We'd like to see the ADX get back above 20 and get back above that negative directional indicator. And if the oil is able to break that wave 3 high, that probably happens. Pretty good confirmation out of the CMF on today's move. The CCI say it got back down in an area where there's room to run there. So I think that one's setting up for another move higher, USO. So AGX. Some of you are getting impatient on looking at these symbols. Remember, I can't get to everybody. We're already past our time frame. I'm just trying to get as many of them as I can. Invite you to come back every week. If we don't get your symbol this week, apologize, but we'll get them as many of them as we can. AGX, and that completed a wave 5, so it's in its process of heading back to the wave 4, kind of vertical on that move, and we've got some resistance here, so maybe it bumps its head here for a while, but it should go back to that previous 4 target. It may even back and fill first, though, because it's got a gap right there and there's support. So on this one, I would look for it to go back to the previous 4 unless it breaks 44. If it breaks 44, then it changes the picture, in my opinion. So if it pulls back down, as long as it holds 44, I still think you're on your way back to that previous wave 4. UMG, some of you guys are asking about stuff that we're going to look at Thursday night. Natural gas is taking a hit. Do you know why? Because the weather moderated. Have you seen the temperatures around? I mean, it was 70 degrees in New York today. So you're not going to get a move to the upside in natural gas when you have the temperature in the 70s all around the country. Was commenting today looking at this. Minot, North Dakota, 55 degrees today. That isn't going to cause a spike in natural gas. So we got to wait for the weather to get cold again, and then it probably turns and moves back to the upside. So it's taking this opportunity to create a wave 4 corrective move here. That's what it's supposed to do. So there's no surprise going on there. Mike wants to look at Intel. So take a look there. And completed this wave 5 to the downside. This has got to be back with the chip shortage thing here, because the demand is there. I didn't break their earnings report apart, so I'm not sure exactly what was said. So what we need now is to fill the gap today, right? Or yesterday, and then bounce back today. So it ran right up, filled the gap, and pulled back. But it did break back above the 10-day moving average. If you're long this, I think, and took this hit, I think I would continue to watch it and see what happens with 53. If you're waiting for an entry, a more conservative entry would be let that 10-day moving average cross back above the 30, which is the fuchsia colored line, and get it back above 53. So if those two things can occur, then I think you've got something going on Intel. But so again, if I was long, I'd be watching it really closely, concerned about it, backing off today after filling the gap. But the market was quiet today. But if I'm looking for an entry, I don't think I would chase it yet. And you can say that that's conservative, could be more aggressive, but I would like to see that a little bit more. Bitcoin we looked at, USO, Pankaj wants to look at Microsoft, Mr. Softy. And so we'll do a couple more here and we'll wrap things up. And thought for sure we're going to finish on time, but I can talk with the best of them. I think that's what I hear all the time. And we still have this big, huge, beautiful zigzag pattern here. And so we've passed this first level where it was supposed to go. Hard to imagine it stopping before hitting that target. Then we'll have to take a look at it again. A little bit of a vertical move. Don't like this gap, Pankaj, you know, don't like that. But yeah, let's see what the indicators say. A little bit overbought on the ADX there, and positive directional indicator moving down. It's just showing caution. We're awfully close to that wave 5 extension, or this, excuse me, the C wave extension there. If you're long this, Pankaj, just, you know, be cautious. Don't have a lot of leeway for it to pull back a bit here. Give it a little bit of room, but not a whole lot, because of the fact that it is overbought. There's solid money behind it. Yeah, the CCI doesn't look bad either. So, you know, maybe you just need this ADX to calm down. It's just a little bit overbought, but man, that is a good looking zigzag pattern. And it seems like there could be a chance that extends to 161.82. I just would be cautious right here. Maybe nothing more than a sideways consolidation and it runs again. The other confirming indicators are suggesting that. The only one that's flashing that, hey, it's overbought is the ADX. The DMI is even good, so be careful there. We'll look at NVIDIA, then we'll look at gold and silver. And I think that'll be a good way to wrap things. A lot of talk about gold in the financial markets today. NVIDIA, man, another one, big split, and it doesn't care. Just going to go run again. And just like Tesla did, get away from this vertical stuff. But man, this stock could keep going. I mean, it really could. It's just, they've got their you-know-what together. They're doing everything right. And it's just a good, solid company. And going through this sideways stuff here is ideal after this big move to the upside that occurred on the 4th. That's exactly what you want to see. And so perhaps we move higher from here. That's okay. Yeah, a little pullback there in the CMF, but it's not really divergence because the stock's going sideways. It's just more of a function of it being overbought right now. I think the only thing that could hurt those two, Microsoft or NVIDIA, is a more severe move down in the markets than it looks like we're going to have at this point in time. So GLD, look at some gold, and it made it above 170. We've been talking about that for, I don't know, it seems like forever. And last time it tried that was in early September, and then it tried it again with no follow through back in July. So, you know, Doji yesterday, that's not a breakout bar that you want to see. So I wouldn't count yesterday's move above 170 as a breakout. You don't really get a breakout bar with a Doji little tiny bar like that. Today to me is the breakout. So I would want to see, can gold follow through tomorrow? And if so, then we have to start asking the question, what's going on with gold on this move higher? But it looks like it wants to continue. And yeah, I mean, it looks good. The only thing that could be better is that ADX to get above 20 and that negative directional indicator to dive down below the ADX. You can see it's kind of giving you this little working its way higher, underlying strength, confirming this move that occurred here from the 160 level. And maybe we're getting something ready to go with gold. It's been a long time since we've talked about a significant upside move in gold, but perhaps it's starting to happen. Silver, interesting here because we've been talked for last year, year before, we were talking about how silver was the leader. Gold had always been the leader, and silver was big little brother following along. And then they switched, and silver was the leader. Well, right now it looks like gold could be leading again. The chart looks a little bit better. We need to get silver above 23. I like the looks of this zigzag right here, right there. So that's suggesting that, yeah, we go up to the 100% extension at 24, which is, remember when we were talking about how it almost seemed like every dollar there was a step up in silver, resistance along the way. So it had supported 21, it's gotten above 22. Now it's going to take a look at 23. So it looks like perhaps we can do that and get to that 100% extension, but we need a better looking supporting support out of the DMI. It's not there yet. That's not what you want to see happening with the directional indicators already. And the ADX really hasn't given you any sort of a tick up with this move over the past week. So I want to see that change significantly. So I like gold better than silver right now. And that's, as you know, that's opposite of where I've been over the past couple of years, been far more into silver than gold, but that's the way the chart looked to me right now. So sign off the same way every time. We know the most valuable thing we all have is time, and we really very much appreciate it when you spend some of your valuable time with us. We do our best to make it informative and educational. Hope you found that tonight. Appreciate you being here. Those of you on YouTube live streaming, glad to have you as well. Look forward to seeing you again next week. Hopefully you'll come back, and hope you